Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the slightly delayed Bull versus Bear webinar for TGI. Thank God it's Friday, the 7th of March, 2025. Welcome, everyone. We're going to go through our usual regular run through here today. We'll take a look at the calendars, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires. What are the major geopolitical, macroeconomic, fundamental, central bank, data driven events that are moving financial markets right here, right now? And then we'll take a focus onto those markets, take a little look at some of the levels we might be looking at that are interesting going into today on the major markets that you guys are trading, which are pretty much S&P and NASDAQ. So, excuse me. Yeah, we'll go through all of that over the next 10, 15 minutes or so. So first thing to highlight is here, we've got it in the members area. It is the US employment report today. That's at 7:30 Central Time, 8:30 Eastern Time, 13:30, what's 1:30 p.m. GMT. That's today. We have had a shift in the policy now. We now actually halt the trading 2 minutes before and after, so you can't trade and you'll be liquidated out of any position. So you can't fail on that, but we will liquidate you out of positions if you're holding positions 2 minutes before that, and then the markets are shut off from 2 minutes before to 2 minutes after that data release. And that is the real focus going into the day. We've had fairly light data in here out of Europe this morning. All eyes on the employment report. Remember, it's not just the NFP, the non-farm payroll element, that takes most of the focus, though. Well, that's expectation is 159,000 here, according to investing.com. But we're always watching the average hourly earnings as well, to see if there's any kind of down to go uptick in the average hourly earnings compared to expectations, because obviously that can feed into inflation. Also keeping an eye on the unemployment rate as well. So keeping an eye on all of those. Remember as well, it's the Fed meeting in here in a week and a half's time. The Fed meeting is the 18th and 19th of the month, and so we're going on the blackout period from tomorrow, from Saturday the 8th, ahead of that meeting. So today's the last day for Fed speakers, and we have a whole host of Fed speakers. We get Fed members Bowman and Williams speaking at 10:45, but probably more importantly, we get 12:30 Powell speaking. Trump also speaking later today at 1:30. Remember, these are all Eastern times. I'm not sure what that is. I saw White House press release in here. Let me see if there's something on that link there. No, getting an error message from the White House page not found. There you go. I wasn't aware of that, but Trump due to speak. I mean, obviously he tweets all the time, right? But Trump speaking later today, that could be interesting watching out for that. Powell though speaking, certainly going to be watching out for that. Powell speaking. Going into today, the employment report in just under the hour. As I say, 7:30 Central, 8:30 Eastern, 13:30 GMT. Watching out for that. Remember, no trading 2 minutes before or after, you'll be shut out. We do get, as I say, and then after that, 10:15 and then 10:45, actually 10:15, 10:45, Bowman, then Williams from the Fed, then Powell from the Twed at 12:30. And then by the looks of it, we've got Trump speaking at 1:30 Eastern time today. So lots going on today. Busy day with Fed speakers and the big employment report. As we've already gone through this, remember today's the last day of Fed speakers. So Fed Powell speaks to the Monetary Policy Forum at the Monetary Policy Forum in New York today. I'm guessing that's where the other Fed speakers are, maybe earlier on in the day. Those speeches from Bowman and Williams potentially at the same event. I'm not sure. So we're watching out for that today, definitely. As it was just so they're going to talking about the blackout period here. So that'll be interesting to see what he's got to say, maybe talking about tariffs, maybe talking about everything's going on geopolitically, who knows in here. Let me just refresh this. I was waiting for this to update because I didn't see it in here. Oh, here we go in here. So this is updating now, the Morning Briefing Americas. Job may spur it, but there's room for disappointment. So it can go either way in here. The anticipation in here on jobs data in here, see how it's going, whether any of Trump's policies so far is going to affect the jobs outlook. Mexico review its levies on Chinese shipments. Lots going on the tariffs in here. They're on, they're off, they're on, they're off, they're on certain. With Mexico and Canada, they're on certain goods, not on other goods. We're certainly keeping an eye on any developments there, and potentially from Trump later today. On the stock side, obviously we had further losses yesterday, significant losses. Took out some important levels in here. We'll talk about that shortly, and just holding an important level on the Nasdaq. So we'll take a look at those shortly. So US stock futures are actually rebounding a little bit overnight ahead of that payroll data. So NFP data to give snapshot on labour market as economic worries mount. That recession word being used more and more at the moment. So again, futures inch up with payroll data. Powell's remarks on taps, we've spoken about both of those already. Same thing coming out of Reuters there. But US stocks over the last few days whipsawed by tariff confusion, to near key technical level. Talking about levels in here. S&P 500 breaches 200 moving average for the first time since November 2023. Slightly below there yesterday. That's on the cash index, I believe. Markets look to jobs data to revive spluttering treasuries rally. US hiring set to remain healthy in February for policy impact. So saying the policy impact's not really coming through yet. And then Trump's on again, off again tariff strategy sows confusion. So yeah, all of that to look out for today. Potential stuff on tariffs, and also potentially more news going into today, potentially on there's been murmuring still around ongoing talks regarding Ukraine, Russia. On the overnights, the Nikkei followed US markets down from yesterday this morning. So down just over 2%. The Hang Seng was down about 0.6. European averages also getting hit again this morning, following US down. So FTSE's down 0.5%. That's the UK index. The German DAX down 1.5%. And the CAC coming up to 1% lower on the day. But US futures have had a slight rebound, as we said there. The Nasdaq's up just under 0.5%, and the S&P 500 up 0.3. CME Fed Watch, so I thought this was slightly interesting for the March meeting. Obviously, we're going into this blackout period. It's 1.5 weeks away. Pretty much no chance for a rate cut, but a chance, 9%. Remember, this has been sitting at close to 100% in here. So slight chance of a rate cut. It's not going to happen, right? But then equally, it just shows you that's the way things are moving. The sell-off that we're seeing in the stock market, combined with slowing data, concerns about recessions, ongoing geopolitical risks, confusion around tariffs, all of that is increasing likelihood of rate cuts. So we've been looking at that with now the June meeting, only a 13% chance that we don't get a rate cut by June. So the market's really started pricing. And even if we go to May now, 50-50 on whether we get a cut in May, right? So now, remember, we weren't looking for a rate cut till like June, July, only a couple of weeks ago. Now it's been brought in as early May, and then, say 9% outside chance we get one in March. Is almost certainly not going to happen. But by May now, the market's saying 50-50. By June, July, we're certainly looking for a rate cut. And potentially now, if you look, this is 2 rate cuts. So here and left, from this middle column, this taller column, 40.7 to the left, is 2 rate cuts. So we add these two together in here. So we've got 34, just over 34, 35, 42, 40%, 42% rate cut, 42% chance we get 1 rate cut or less. But by June now, there's a chance we've got 2 rate cuts. It might not be 2 rate cuts, it could be a 50 basis point cut. So the market's now pricing in 2 even that's by July. And now by year end, the bigger chance in here now is a total of 3 rate cuts, but there's also growing risk of more than 3 rate cuts now. So we've gone from there being only a couple of weeks ago, 2 rate cuts, now 3 rate cuts, potentially more than 3 rate cuts by the end of the year. And that's because concerns about recession, and that's because concerns around everything that's going on with tariffs, with the geopolitical risk, Ukraine, Russia, and the spectre of that hitting the economy, and the US now, the risk of a recession now being talked about. If we look at yields in here, obviously we had that big plunge lower in yields. The market did come right off this yield level in here, this 4.13% in here, and rebounded back up towards higher yields. That's higher yields, lower prices, as maybe things are looking a little bit better on the horizon. But so this big buying, this go lower in yields, this big move lower in yields has been all about concerns around the economy, concerns around recession, and safe haven geopolitical risk. So we've seen safe haven buying. So that's bond prices going up. We've had this big rally right the way across the yield curve, 30-year, 10-year, 5 years and 2 years. You remember the short end reflecting concern expectations of a more aggressive central bank, the longer end reflecting concerns about the economy, so going bid. But we have had a significant pullback down lower, so we're going to have to monitor to see how that plays out. On the indices, the market's taking out further support levels in here. The S&P 500 taking out all of these supports now, below the lows in here from January, below the lows now in here from March of last year, and below the lows years from, sorry, not March of last year, November of last year, and then October of last year. So the market now take it at its lowest point since September of last year on the S&P. Similar story, the NASDAQ, we've taken out this low in here, close to this low over here, and we'll take a look at those. We'll zoom in now on the chart. So actually, I'll go back to the ES first. So you see the ES already taken out this low in here from the year, and then it's taken out these two sets of lows in here from November and also October. We took those out. Been flirting down below those over the last couple of days, but then down below and closed below those and still below those. So that's a bigger topping pattern. The market at its lowest point yesterday and today in here since September. So the path is still lower in here. And if we zoom into the 30-minute, this is the two lines that I'm going to be looking at. So this is the downtrend line, the accelerated move lower that we've had in here since the beginning of March. So we look at this accelerated trend line. Now the market's sitting right below that, so we could get a reversal above that. The other trend lines are significantly higher. It's up at like 5,900 kind of area. But you've got all these peaks in here that we've been flagging recently. So around here. So if we actually just go and hover, we can see those. Oh, where's my data box? Let's just bring that down and make it a bit bigger in here. So in here you'll see this. I'll just put it on here. We can just see it here. But it's in this area here. So we're like 58.70 up to 58.80. That's going to be the key area of the upside. If we can get above there, then it kind of forms a base. But initially, just anywhere slightly up from it where we are now, we're going to reverse in this accelerated trend line. So up through 57.77, and then the next point of call is in here is this kind of little around 58.21.22 next point of call. So potential base, but I mean, we're going to need the right data coming in here out of the US employment report. And then obviously after that, you've still got Fed speakers plus Powell plus Trump as well. So there's a lot to digest today, but these are the kind of levels we need to, these trend lines in here, what we need to get above to form a base. Otherwise we're going in very negative. In here, you'll see we went right down to this low in here. So this low in here, let's just get the data box back on. So this low in here from, where are we in here? From 1st of October, actually, the low 20,025. And we went right down there yesterday. So yesterday we're down at 20,003 and just rebounded above this low in here, 20,025. Back down through 20,025 will certainly be a significant negative for the NASDAQ and take us lower. On the upside, the trend line in here is some way, this longer term trend line is actually closer than, because we flirted with it yesterday. So the trend line, the longer term trend line is here. So if we can get above in here, I'm going to say, where are we? Around the 20,400 kind of area, then it starts to look a little bit better in here for the NASDAQ. It needs to get above there and hold. And then ultimately, really, though, it needs to get above that little swing peak. So that swing peak, again, why the data boxes all come off? I was just literally on these just now and they were all on. So in here, really needs to get above that little swing peak there. So we want to be above 20,513.25, ultimately. But reversal of this trend line that comes all the way down in here from the latter part of February, that would be a positive as well. So, and that's not too far away. Say if we can get above, I'm going to say 20,300. Let me see where that trend line comes in. 20,003, depending on what timeline you're looking at in here. 20,360 to 20,400. If we can get above there, then it all starts to look a lot more positive. But it needs to get above there and hold, and that's going to be the challenge going into today. And so just a quick recap in here. We have a lot going on. US employment report now in just 45 minutes. After that, 10:15, then 10:45 Eastern, we have Bowman, then Williams from the Fed speaking. Thereafter, 12:30, Powell speaking. and then 1:30. These are all Eastern time. Trump speaking as well. So a lot going on. Markets could be significantly volatile today. Keep your powder dry. Wish you luck for all that. Wish you a great trading day. Wish you a great weekend as well. Take care. Stay safe. We'll be back with you Monday with another Bull versus Bear webinar.